Good morning, ladies and gentlemen. Welcome back to another pre-market watch list here today. I'm glad that you guys are all joining in with us. I hope that you're going to learn something new by joining in. If this is your first time, all we do here is try to find some of the high stocks to trade every single morning, present them to you with a relatively kind of thought out game plan so that way when the market opens, you kind of know what stocks to look for. In no way, shape, or form are we telling you to buy any stocks, sell any stocks. Ideally, we're just showing you what stocks are usually going to be heavily traded throughout the day that are going to be give you some good opportunity. So we're going to talk about the market. We've been covering this every single day for the past month, 2 months now, and that's because the market is in an extreme volatile place right now. A lot of people are uncertain what the market's going to do. You know, volatility index is increasing, so there's a lot going on. Before we get into that, I must say thank you all for joining in once again. So good morning to everybody. I'm having a great day. Jeremy Berry, hello. So once again, guys, thank you guys for tuning in. We're going to go ahead and start looking at some of these stocks. I'm going to share my screen so you guys can see what we're looking at. Again, today wasn't looking amazing, so it's going to be one of those days where I kind of just resort back to some easier plays. All right. So let me go ahead and start sharing my screen to you. This one. All right. So you guys should be able to see the screen pretty clearly now. So here we go, right? Let me zoom in. Let me just bring this down to one chart. So let's look, first things first. I know you guys are probably like, Connor, I don't want to look at it anymore. You've looked at it a million times, but seriously, let's just look back over here at the SPY. All right. Look at the daily. You know, you can see how bearish it was, and it did this and it did that, and then it's gone this way. So we're not going to go back that far, but we are going to look at you know, we're going to take a look at like a 5-day chart or something, or maybe we'll do like a 20-day chart. Yeah, that's good, right? So on this 20-day chart, right, I mean, you can see, right, it was rallying, trying to get back up. It reached highs at 280 here, double topped, started coming back down, rolling over. It bounced here at the 268 mark, bounced pretty good. We tried to go higher. This was yesterday, right here was yesterday. That was a really shitty arrow. Let's redo that. So right there, that was yesterday. This spike right in here, that's when the Feds came out with the news on their interest rates. The price got jacked up real quick to get shot right back down. The price is now breaking through 268. So I do anticipate that we're going to see another red day in the market. Except the difference is, we're just now starting to break through a previous support. So this could be a bigger red day than, you know, most red days. So definitely keep your eyes on it. Right now it's moving pretty fast. Hell, some of my stuff's probably up pretty fucking big. Let's see. 1 second here, guys. I just want to check something. Yeah, buddy. I am up I'm up 14% on a swing trade overnight because of the market. This thing is just coming down. Holy shit. Let me zoom in. I gotta look at this. Like, isn't that nuts? Look at that. We just dropped 269. We've already dropped 2 points right now. We're just coming into 2 points. All right, guys. So we bring this to you in live time and show you the markets are looking extremely crazy right now. So what does this mean? All right. So look at this, right? What does this mean? Let me pull up. Do I want to do that? Shit. I don't want to, but I will, I guess. Here we go. All right. Now look at here. So you can see the market on the left, right? So we can see here markets, you know, are coming down pretty big. Now, if we come over to here on this side, look at TVIX or UVXY, right? And then let me actually erase this here, right? So you can see Patterns are almost identically the same, just backwards. Okay, so they trade inversely of each other, but it's not an inverse. It's based off the volatility index and how volatile the market is. So what I'm getting at, as I've been saying for weeks now, the tickers to watch right now as the markets are coming down are tickers like TVIX, UVXY. You could literally search any inverse ETF to the overall market. You'll come up with a handful of them, and those are the ones you're going to want to watch. Like I said, this is a position that I was swing trading over. That's a horrible view. I was swing trading this position overnight. I bought yesterday on this low. Or no, I got in right here on this, right about 7:30, and then I rode it all the way up to here today, as the markets are starting to look very, very crazy. Now, let's actually talk about this. So again, keep this in mind. Markets are coming down. Keep TVIX, UVXY. I think there's a VXX, VXX, VIX, VIX. Or not VIX, sorry. VIX is the volatility market. This is another thing, guys. This is another thing to watch. I'll do a separate video on that. We don't have time for that. All right, so first things first, keep your eye on the market today. Keep your eye on TVIX. Keep your eyes on UVXY. All right. Secondly, keep your eye on Facebook. Facebook probably going to see a red day. Why would I say Facebook's going to see a red day? Well, the market, here, let me show you this, right? Markets are going very red. Facebook's a big blue chip stock. Does it look like it's bullish to you right now? No, it looks very bearish. We're definitely downtrending, right? This is when the news broke about like the data breach and then all the stuff, right? And then it got hammered, went from 185 down to 161, had a strong bounce. Now it's coming all the way back down to test this level, right? So let me remove this drawing. Damn it, not Fibonacci. Right, so Facebook right now is about to test its trend line support. Let me zoom in. Right, so you have the initial bounce at like 162, followed by a higher low. This was a couple days ago, right? Through pre-market into the next trading day, right? And then, so it was definitely uptrending, and then we had this big bounce, and then we started making lower highs. So now we're downtrending, and now right here is where we're testing that trend line support. So if this in fact breaks, we might see a pretty big red day on Facebook. Very possible, especially with that bad news still lingering. Mark Zuckerberg actually just went on, maybe it was CNBC News, I can't remember exactly, but he just did an interview, and they were the person interviewing him was just bringing up the matter and attention to what was going on with the whole data breach and how they felt about it and what are they going to do. And I guess he didn't really have a very long answer. It was very short. It was very brief. And there really wasn't really much to it. So keep your eye on Facebook. Watch for it to break the trend line support and watch for it to break down 265. All right. If in fact Facebook can hold 265, or sorry, not 265, 165, you might see a little bit of a bounce. You might have some opportunity for a long, but in the bigger picture, I would be more short biased. This is a downtrend, right? This is just a bounce in a longer term downtrend, most likely. Okay, so you do have to be cautious of it still, just because it's next to support and it may or may not break down. Okay, so just keep that on your watch list. Facebook, that is. The other one that I would highly suggest a lot of people to watch is GERN. Now, this is one that I would say watch just because it's gone up like crazy over the past couple days, and I haven't even paid attention to it at all. I don't even know why. I never did pay attention to it, to be honest. But anyways, it's been going up for quite some time. So it's really, really extended. So what I'm pointing out for a lot of the traders here, trading GERN, is if you've been trading GERN for a while, just know that it's really, really overpriced, kind of right now at least, right? The price is 533. So the price is like up here, and support is right there. Okay, so this is support. This is where the price is at. That in itself means the stock is 40% off of support. So it's possible that, let's say GERN started pulling back today, it could have a 40% pullback in one day before it finds support. Is that going to happen? Most likely not. Most likely it's not going to pull back 40% in a day, but it could. What you need to know is it is overextended. Pure technicals. That's just a pure technical analysis that GERN is very overextended right now, and it could come down pretty hard. So for those trading it, for those watching it, you do have to be a little cautious, okay? They had an earnings beat not too long ago. They released some news yesterday that GERN is supposed to present at a healthcare conference. What this is going to do for the stock is bring in some more investors. People are going to start seeing this as an opportunity. Right now, the price is way too high. I would need the price to pull back before I could consider even getting long on it. Right now, it's too overpriced for me at least. So I myself am probably not going to be trading that. So what am I going to trade today? To be honest, what I'm going to trade today is most likely going to be inverse ETFs to the overall market for right now. So TVIX, I like. UVXY, I'll probably trade that. There was one that I was considering is ARNA. I wonder if anything else has changed. One second. Okay. So ARNA is already doing what we expected it to do to pull down to 40. That's kind of no longer one that I'm considering watching. Yeah, right now, Junior, you're right. Too hyperbolic on the price is too hyperbolic on GERN, so you got to wait a little bit on that. Let's see. Are there any stocks that you guys are watching this morning that you would like me to take a look at? Again, I'm really not going to trade too much today. I'm probably going to just only focus on TVIX and UVXY. Considering I already have positions in them, I'll probably just nurse them and watch them all day. Hyperbolic, parabolic, um, parabolic, they're basically the same thing. MNGA, I'll take a look here. Oh, shit. So MNGA, very, very light on the volume side of things. Price is very, very low. It's been downtrending since $72, which was at the, really? That was at the start of this year? No way. Holy shit. Yeah, so MNGA is basically just it's a shit show. It's failing to do well in every aspect of the company, obviously, because no company goes or nothing goes from seven. I don't know exactly what they do, but nothing goes from 72 to 90 cents if it's doing well. It's hard to say. It's very low priced, but the nice thing is you kind of have I mean, honestly, if you want my honest opinion, you could realistically buy this. This is honestly not a bad opportunity to buy MNGA for one of two things. Actually, only really one thing is because you can tell, right? If you look at MNGA here, though it's been downtrending, doesn't mean you can't make money on it to the long side. Right? So though it's been coming like this, you can see that it's starting to flatten out and almost go sideline, right? It's starting to flatten out right here. And what that can do is create an easy identifiable risk level, right? The low is 91 cents, right? So we have a low on MNGA here at 91 cents, right? So ideally what I would say is, yeah, this really isn't a, though it may not go up and it may just trade sideways forever, you have a perfectly defined risk level. Okay, so let's do that. We have a perfectly defined risk level, and that risk level is right here, right at 90. Why do I have an eraser? That's not what I'm, it's right at 91 cents. So ideally your stop can be right below, that's ugly, right below 91 cents. So your stop would be a break below that green bar, which doesn't even really look good. Thickness is too big. So yeah, your stop is right here, right below 91 cents. So you can technically get in right now at about $1.08, $1.09. So you're gonna have like a 20-cent stop loss, and then ideally you have, right, a 20-cent stop loss, but you have, you know, endless opportunity to the upside, right? I mean, yeah, you have resistance points, but again, that's not a bad trade. You have a very easily defined risk level, you know, right below 91 cents. You could take the trade, go long, maybe for a quick pop, right? That's kind of what you're looking at, a quick pop. Mr. Nugent, one second. Actually, I am going to be doing a whole video on gold-based ETFs, GLD, NUGT, maybe isn't JDST one of them? I always forget if that's one. I think it is. All right. Yeah, come on. Yeah. So I am going to do a whole video talking about the gold-based ETFs right now with where the market stands. I'm going to do a whole video regarding inverse ETFs. I'm going to do a whole video regarding the volatility index. And so there's a lot of stuff I'm going to put out here for you guys soon. What time is it? 8:56. Okay, I got a few more minutes here. I'll cover OMERS because I even looked at it this morning. OMERS, Omer's, isn't it what? Yeah, why isn't it coming up? Or maybe it's just Omer. There you go. So if you look at Omer, wait, hold on, let's do this. So looking at it from this standpoint, this is a 3-year chart. Okay, this is a 3-year chart. And yeah, 3-year chart, and you could see that it's bounced here before at like, what is it, like 8, 9? Bounced here right in the $7 area, bounced here right in the $8, $9 area, bounced a couple times here, and now it's starting to bounce again. Over 3 years, it has a high of 30, and then it has this area right here, which is right in the, you know, $25 area where it's seen a lot of resistance. So in my head, I'm already thinking this stock is at $19, so it's already in a resistance point. It's already coming to some major resistance points. If you look at it from like a 5-day chart, the stock's going crazy, right? Or when you look at it today, stock's going crazy, goes from 11 to a high of 20. You got to read the news. So there must be a big bill, or they're doing something. You can read the news, but it looks like okay, so it looks like maybe there is on Thursday a new government spending bill that will benefit the cataract surgery drug Omidria. So ideally, it looks like the feds are going to be passing some bill, and within that bill and in that budget for spending, there will be money spent that pertains to Omer's their drug, or you know, right around there. So that's really good news for them, right? Stock's going crazy. So I would be long bias on it today, but not where it's at right now. Okay, price is too high. Price is too high on Omer up here at the 1950 area. Down here, that's a buy, right? Down there, that's a good price. Up here, that's too high. That's a sell, right? Up here, sell, right? Because let's say you did, let's say you did the opposite, right? I could just, all right, let's say you buy, right? You have all this room down that's now your risk. Okay. Now, so if you buy up here, you have all the way down to like pre-market, support, right? You have all the way down till this area right here to where it could bounce, right? Or, it could pull back, but ideally that's the saying is you're buying too high, your risk will be far greater. All right. And vice versa, and the opposite, if you were to, right, buy in here, your risk is right there. All right, so let's redo that real quick, and we'll do it with some better things. So let's say you wanted to buy it, you could buy it, you should have been buying right here, right? That would be your buy, and then your risk, and I'll put this in red, risk would be like right here, right? So you could buy, and then that's your risk, right? So that's the way I would have looked at it. This is a buy, and that's your risk. But if you were to buy up here, if you buy there, your risk is so much greater, right? So if you were to do it this way, if you're to try and buy the high, you're going to buy up there, and then your risk is all this down versus this. See the difference? That's a perfect example of risk to reward right there, is that when you're buying something, you need to be able to identify where you're going to be wrong about your trade. So if I buy here, right, and it only, if I buy right here, I know that this trade is probably going to go red, or I'll lose money, or it's no longer going up if the stock all of a sudden starts turning down and starts breaking this way. And then, the last spot of support, the last fight that I'll put up is probably going to be somewhere in this area where it bounced around before. Because if it bounced there before, there's a chance it might drop here and bounce again. But if it breaks through that, then yeah, it's probably going to keep going down. Vice versa, if I buy up here, the stock could pull all the way down to here, then it could drop to here before it bounces, right? So too high, huge risk. Not a bad buy, small risk. Okay. So, but anyways, yes, keep that on your watch list. So today was kind of like a little iffy watch list. I'm not crazy about it. It's one of those days for me personally. So I hope you guys were able to learn something here. And if you would like, what was I going to say? And then I was going to say, check out the description box before you guys head out here. Let me stop sharing. Let me get this off the screen. So definitely check out the description box below before you head out, and make sure to join into our free Facebook group. So you can just kind of stay in linked, and we kind of send through a little watch list there. But if you just want to stay in the environment of Boiler Room Trading, everything that is that I do and our team, the best way to stay in contact with me and everything is through Facebook and Discord, our free chat room. So in the link below, or in the description below, you're going to have a link for our Facebook group. Absolutely free to join. We have like 5,000, 6,000 members there. And then you can join our chat room too as well. That is free. We have about 5,000, 6,000 members there as well. So there's a lot of people to talk to about trading. Not only me, but especially the members that are joining to our premium service. They know a lot about trading these days because they've been with me for so long. So you can learn a lot just by being involved in the right environment, right? That's what trading a lot of times is about, is being involved in the right environment, and having the right people to talk to. And that's definitely what we have going on here at Boiler Room. So definitely check out the description box, and then I'll see you guys all tomorrow morning. All right, take care.